or two people to get in here. It should be good to start. So instead of it being completely freestyle like last time, I got the pairs in mind that I'm gonna cover. Instead of making it entirely up as I go along, I'll break down Bitcoin, GJ, gold, Nasdaq, and GA. Maybe a few more depending on how things go, how we progress. Let me get this drink out of the way. So, just waiting for 1-2 more people, then I'll get started. We'll get started here on Bitcoin, okay? As you can see, I got a 30-minute chart plotted out on BTC, trading within this channel. The channel is just demonstrative of structure. I'm not using it to execute positions. I will go on a multi-time frame analysis, but looking at this time frame and this specific entry, because I have some layered entries, you'll see on the weekend we formed this high on Sunday night. As we came into Monday, we drove into just below it once and twice. This is Monday's high. We initially deviated that on Tuesday, and what we would have taken here is we would have got early sellers, both on the Monday high and the Tuesday high. Early sellers would have got involved. We had this one more drive on yesterday's New York session to wipe out everyone. We wiped out the weekend sellers, we wiped out Monday sellers, and we wiped out the early sellers on Tuesday. On this swing failure, I took a small entry, which is now running in very, very good profits. I've rolled my stops to break even here about 85,900, and I'm expecting this to roll all the way to the downside. On this lower time frame, I'm looking for about 6,000 pips into 79,900, just below the 80,000. It's going to be this imbalance of volume that is resting here. Obviously, in order for us to do that, what I would like to see is a breakdown of these 83,000 weekend lows. Okay, we've come close to them, and we left these lows here almost purposefully, in a sense. These lows have been left with stop losses, retail stop losses trailing below them for a later date or a later time for us to come and reevaluate at this area. So we have these immediate term lows and the stop losses resting below them in confluence with the weekend lows. These lows, poor lows, these obviously on the weekend, we know poor lows often have retail involved in them. Weekend lows, well, a lot of institutions simply aren't trading on the weekend, so we know it's a lot of retail positions. A move below this 83,000 is in my eyes imminent because of how many retail positions there are to be taken, right? That's how I'm looking at Bitcoin on this shorter time frame basis. Like I said, this is a bit of a smaller position for me. And I'll get into the logistics as to why shortly. In terms of where upside could be seen and you could get a potential entry, if we take the fib from high to low as such, you'll see we have this imbalance of volume during this drive down in the yesterday's New York session, and that is in confluence with our Fibonacci level. So if we actually were to come back up to this zone, test into it, show some weakness on 1 or 2 candles, then we can potentially look for this move to the downside. So this is a potential entry zone for this New York session if you have no risk on the table for the BTC sells. With that said, this trend's somewhat aggressive, so it quite depends on how New York are going to attempt to take this session. What I would like to keep in mind, if we look at session by session, what we have is New York in control of the highs of the week, the highs of yesterday, etc. So a run back up to this zone here and not a run above it would make sense because New York already control the high. They have no reason to run the high because they're already in control of it. They'll just be running their own stop losses, okay? So I think that the high is set here at 86,400, and the optimal sell entry is going to be on the retest of this area here, okay, between 85,200 and 85,700-ish. As mentioned though, what we have is an aggressive trend set in the New York. Pre-Asia, we set these highs here. Well, this is the end of the New York session. We have the Asian highs, and we have the London highs. New York off the open has gone straight to the downside, okay? It's possible that the New York either goes straight down, starts to break down from here. Once we get below 83k, we can see a cascade of stop losses, or we have one more spike just marginally higher, just so New York can control the high of the day. It's very, very common play that you see the New York traders making. It's just this one, even when the high is in place and they don't need to revert it, or the same goes for the low, they will just come and spike what London and Asia had set, just so they can take control of the high and feel a bit more comfortable with their position placement and stop loss placement. Solar, Pluto and Louis, what's good, guys? What's good? That's how I'm seeing the 30-minute on Bitcoin. Pretty basic and pretty simple. The reason why I feel so comfortable in this position, firstly stops are at break even, etc. But if we come over to the 4 hour, you'll see this is layered with another swing position that I have in place based on a 4 hour analysis. So we already know what happened with the weekend highs, that we created the swing failure of it, okay? But this all took place within a major area of imbalance on a 4 hour and a daily basis. I'll get into the daily in due time. But on a 4 hour basis, we have this, all of this price action took place within a major imbalance, okay? So this swing failure pattern that happened with both lower and higher time frames is in confluence with the volume fill, which gives us further confidence in the trade. On a 4 hour basis, you can see that we do have a bit of an imbalance in between these areas here that has been marginally filled on this most recent candle. This is the area where you would, like I mentioned, if New York wanted to spike the high and come back down, that's what it would be doing, is filling these 2 hour, 4 hour imbalances, okay? On the 4 hour basis, otherwise it's like very, very similar, okay? We're targeting into this area here, which you can see quite clearly. This is the imbalance that I had mentioned, towards 80,000, 79,900, depending on the time frame. We have these lows down here at Thursday, 78,450. That's in confluence with the previous weekly open, by the way, so I really do like this area. And then finally, my major target for the 10,000 pip move is the 74,000 lows, and I believe these lows are going to get taken at one point or another. It was always a case, if you go and watch the old previous live stream, are we going to take it from this zone or are we going to take it from the 88,000s? We have got some confirmation now, so we're definitely confident taking this swing position into this 74,000 target. Alright, on the 4 hourly, you can see as we've spiked the highs, what we need to be careful for, or at least can be keeping in mind, is now we're coming towards these range lows. Alright, what we want to do on this 83,000 is we want to really break down from the low. Okay, we don't want to have this case where we create a swing failure pattern just like we did here. In the event that we swing fail this on the 4 hour, then yeah, I'll take risk off the table, and I'd probably look to exit this trade and maybe keep my entry from the 85,900 open. Okay. But Bitcoin, I think downside imminent. That's how I'm seeing it at the time being. I think downside is imminent over the next set of sessions. By Friday, by the end of this week, I would like to see these major lows, the 74,000s, be taken out. It's quite a big move on Bitcoin. And I'm not much of like a macro guy. I don't claim to be by any means, but I don't think this is the ultimate low. I'm not saying that 100k, an 8k or 110k was the ultimate top on Bitcoin. I think there could be still pushes to the upside. I think we could create a low here. It's low to 74,000, maybe 72 or 70k. I'll get into that on another day. But yeah, I don't think this is the low on Bitcoin. This is the high on Bitcoin yet. I think we could fall down and then have one more rally up. But that's just my 2 cents. I'm no macro trader. I'm trading day by day, week by week. But Bitcoin simple. We're in sells from 85.9k and from 84.5k. I'm gonna go over gold. Crazy move on gold, crazy. If I were to pull up Discord here for the purpose of showing some things. Okay, you can see we took gold longs the other day, on Monday, okay, in the New York session. 3,200 was the entry. I reinforced us a few hours later saying, yeah, we're good, we need to stay in this trade. Once we hit the target one, what I said is to roll the stops and break even, and then on my market outlook, I'm mentioned, this is going to rally, okay? We don't want to take profit yet. We just move stops to break even, take risk off the table and let this shit rally. Woke up to a beautiful profits this morning, about 900 to 1,000 pips in profit. I think 900 pips is what we captured in the Discord on the conservative side. So on gold, in terms of what we can see next, well, I think we are going to have reversion of some kind. We're now seeing 1, 2, 3 wicks into the upside. With that said, we've had such a violent move. This is literally the low of the week, and I've exited up here right near the high of the week. There's not much of a better move that I can personally take. So what I'm not going to do is sit here and give out potential ideas on gold and what trade to take next after it's just made 1200 pip move. You know, I'm not really interested in it. What I will cover though for the stream is kind of the theory of the trade. So there's two things you want to take into consideration here, okay? You want to take into consideration the context of where gold is trading on a higher time frame basis. Take a look at the daily. Gold's in just constant price discovery, okay? It's not uncommon, as you can see by these daily candles, for gold to just pop off on a day. We're in price discovery. There's not much resisting us above. When you're taking, obviously you want a gold long bias more often than not, but when you're taking longs on gold, you need to be leaving these runners when we're in such market conditions such as this. Okay, so a lot of the hold the trade and don't take it out and stuff like that was down to market conditions, alright? But we're also daily cycles, okay? 1, 2, 3, range, okay? 1, 2, 3, range. We'll see how it goes, okay? Daily cycles also suggested that we're going to the upside. That's why another reason I was confident in the trade. So we want to take into consideration the macro context, etc. Gold's just rallying like fuck right now, okay? You don't want to be caught on the wrong side of it. Next thing I want to keep in mind is the context of individual candles. So the way that the candles were trading here on the entry, 1, 2, 3, 4 wicks, 4 drives into the area of interest, okay, into our area, our volume block. 4 drives into it, 4 prices punched back up. Clear demand for buys in this area. Once you've seen the first candle, okay, the second candle, alright, great, we can look for entries. But when you're seeing the second and the third, it's very obvious who's in control of the market at this area. At these prices, right? It's very, very obvious who's in control of the market. Buyers are in control. We had these equal highs in place, so anyone who's on the wrong side of the market in sells, anyone who's on the wrong side of the market in sells, they are going to have their stop losses resting above the equal highs. And what we know is above these highs we have price discovery in confluence with seller stop losses from the double top. So I knew once price would breach this region, buyers who were already in control, as shown by here, and once again demonstrated they're in control on this retest. I knew that once we breached this 32.45, the buyers who were already in control would start hitting the stop losses of the equal highs. This was going to provide further buying pressure to the market and essentially cause a cascade. That is exactly what happened. I did not expect the cascade to be to such an extent, but the fact that I was sleeping probably worked in my favour. I may have closed the trade out up here or here. We got it all the way up to like 32.90, 3300. That is the move that I've taken on gold. I'm not going to go too deep into analysis. My advice to you is just let this settle, okay? Let it form a range like it did here, okay? Let it stabilise and let the move come to you. Don't just be chasing this on gold. In terms of like longer term price targets, I think gold's still got a bit of a way to go. I think 4,000, 4,200 might be the next macro area of interest. Again, I'm not covering that in the stream today. That'll be exclusive for the Discord. But 4,000 or 4,200 still in the sights for me over the rest of this upwards run. Okay. I'm going to go into Nasdaq now on a 30-minute basis. Take a look at NAS. What I am looking at here, we'll go step by step, alright? Look at the immediate for the time being. Last night's close / open, very violent, left a massive gap. Okay, we didn't really trade back into that gap. We traded to the downside. In London, we had initial gap fill. Okay, so we filled the gap even into the midpoint, practically to a T. And then we've started moving to the downside. This gap fill here, technically is a valid entry if you were sharp enough to find it and to get it. I unfortunately was not. Once by the time I've returned to the chart, price was already back down here. Okay, so I didn't take the entry. What I'm looking at, however, is over the rest of the week, what we're seeing on US 30 is, let's take a look at Monday. Asia high, London had similar high. Once the New York opened, we swept the high, and New York took control of the high of the day before moving to the downside. Yesterday, Tuesday, okay, Asia set a high, London respected that high, New York took the high out, set the high of the day, reverted to the downside. A potential play I'll be looking for today, over maybe the next hour or two if it's going to be offered, is for a sweep of this London high. If we can take that out, New York sets high at the high of the day, they just stay within this gap fill, okay, further fill in this gap, and then push back to the downside. We can look for sells from this 18,700 zone. In terms of where we can target, the ultimate target would be to take out Thursday's lows at 17,773. But an intermediary target, one that we could even interact with just off this New York open move, would be these Asian/London lows down here at 18,370. Okay. This is just a chart that I wanted to kind of go through. I'm not going to go on the ins and outs of execution because price still needs to mature and show us what's actually going to happen next before I can even get to execution. This is something I wanted you to be aware of and something that I thought would be cool to mention. Asia and London respecting each other, New York sweeping them, taking them out, setting the high of the day. Monday, Tuesday, potentially on Wednesday. It's a common move that occurs. It's the main reason I'm covering it is just because it's something I spot multiple times on multiple different pairs throughout a week in the market, and it's something I utilize in my trading plan quite frequently. I obviously you don't have to force it and only trade the sweep of the highs in the New York session, sweep of the lows in the New York session, but it's something you want to be mindful of. New York have the most liquidity, the most volume. They like to use that volume, that size, to be dominant in the market, to set the highs, to set the lows, because they don't want to feel like they're running themselves. Okay, they want to feel comfortable in their own positions. If they're in sells, they want to control the stop losses, and for likewise when they're in buys, they want to control the stop losses. Turns out, in terms of this trade, as I mentioned, allow it to mature, see if we do get this spike, and if we do get the spike and show some weakness, and you can just slam the market sells and you look for this to come back down. Asian lows, Thursday lows. I'm going to come to GA. For those of you who watched last Saturday's stream, see that I actually gave this GA setup on that stream, and it's played out to target one as explained. So I mentioned the optimal trade on the last week is once we get a spike beneath these lows, then you want to look to take buys. I'm not in these buys, unfortunately, but we spike those lows, we started pushing up to the upside. We now spiked the range highs, which would have been your clear target one. At this point, you could have hit those targets, move your stops to break even, and you're in happy days. So for those, if you want to go into the ins and outs of this setup and why I wanted to take it, you should take a look at the last stream. Okay, it's maybe the second pair that we covered. I'm not going to cover it all again. In terms of what's going to happen next on GA, it's at a real decision point at this point. All right, we've got stop losses clustered all the way below these lows and all the way above these highs. Okay, so whatever we spike into first, if we spike into the highs, you want to take sells back down to the lows. All right. Conversely, if we're going to spike into the lows first, then you want to take the buys back into the highs. All right. Super simple on GA. Super simple. We're trading within a super tight range. They've tapped the highs and the lows of it too many times for there not to be clusters of liquidity above and below. All right. Just wait for that liquidity to get hit. Once they've been taken out, then you can take a trade of your own. I'm not going to go into any other detail on that. It shouldn't require any further detail. Okay, you're playing a simple range or a sweep of a simple wrench. And we will take a look at GJ. So if we come to the hourly on GBP JPY. You can see I've got sells plotted out on my screen with the ultimate target of 186.0. 186.0 is last Friday's low. It's clearly in confluence with this massive imbalance that we formed last week on Wednesday. Alright, that's the primary target. Don't need much explanation other than that. Secondary target is Monday's low. If you know how I like to play the Monday's range, we know that the buyers and sellers for the start of the week will have their stops below Monday's high and Monday's low. It's going to essentially provide the initial liquidity dynamics of the week, so we know the stops resting below there, a sense of magnetization. And then my third target, the one that we're looking to come to first, is at 188.00. That's the volume imbalance that we have here, in confluence with this low, this little tap that we had into it on Monday. We have some stops resting below that low, then we have volume to fill in this area here. Okay. In the immediate term, come down to the 30-minute. You see we have these equal highs. Tuesday London, Tuesday post New York. We just swipe those highs in early into the London session and now push to the downside. For us to get this 188.0, we want a clean break of the lows. Right, the lows at 188.600. We want a clean break of these lows, and then we should quite sharply move into 188.0. At which point I will reassess the risk dynamics of this trade. I will look to either take my stops to break even, take partials, or potentially the whole trade, depending on what kind of reaction we get from here. If we do get some type of violent reaction or something nice set up, maybe something like this, we move violent in here, spike up, hold the low, then there's a potential buy setup that you can take. But for now, I'm not interested in those buys. I'm interested in this thing slamming down to 188.0. Alternatively, if I'm wrong on this, what we could see is a sharp move. Now we have these triple highs. We also have last Wednesday's high resting above there. Okay, so if we want to come to the upside, let's say from this 188.0, it could be quite violent. There's a lot of liquidity for us to take out from there. What's good, bro? They're the main pairs I'm looking at for the time being. Bitcoin sells, GJ sells, gold longs completely obliterated and done. Nasdaq potential sells if we get given the trigger. And GA, we just want to spot. We're not interested in the longs or the buys. We have no bias. We just want the liquidity to be run, whether it's above the highs or below the lows. Just look for a spike into one of them and play a reversion to the other direction. How are we doing? How are we doing for time? Let's see. We're 27 minutes into it. Okay, not too bad. If there's any specific pair that you want me to start going over, because I am gonna kind of just be fucking biased towards whatever I'm looking at on the day, then you can shoot me a message at some point and I can bring some other pairs into the rotation. Alright, I'm going to look to log off now. We're coming to 2:30 PM New York time, or London time, sorry, so New York open, New York switch over. I want to be focused, dialed in, and might have to take some entries and do some position management. So I'm going to take care of myself and take care of my own. You guys do the same. Trade appropriately, appropriate risk, etc, etc. I'm going to leave this up for anyone who's missed it. Put the link in the relevant channel. Cheers guys, that's all from me. Take care.